Now, what is taxation? So, taxation that is mentioned in the seventh schedule of the Indian Constitution. It states that the union, the central government, or the state government can levy or collect tax from the citizens. So, that is mentioned in the seventh schedule of the Indian Constitution. Now, what are tax avoidance, tax burden? Then we have Pigovian tax, tax base, tax incidence. Let us look through it one by one. Now, what is tax avoidance? So, here it is nothing but the reducing amount of tax. For example, if you earn 5 lakh rupees per year, but you invest some part of that money in tax saving scheme. So, if you are earning 5 lakh rupees per year and you invest 1 lakh 50,000 in tax saving scheme, so the tax levied upon that amount, which amount? The remaining amount, that is 3 lakh 50,000. So, tax is levied upon 3 lakh 50,000. Since you have invested the 1 lakh 50,000 from your the total income in tax saving scheme. So that is called as tax avoidance, which is done legally, not illegal. Whereas, what is tax burden? Here, the amount of tax person or business has to pay to the government. So this is the normal one where you earn money and the government levy tax on your income, right? Either you're a citizen or as a citizen or a common person or you're a businessman. So anything. So anything on which the government levy tax. So that is called tax burden. So for example, if you earn 10 lakh rupees, the government will levy tax, that is 10% tax on your total income. So that is a tax burden. What is Pigovian tax? So this is the tax on those things which will harm the society. Example, if you are industrialist and your industry is producing smoke or pollution, so Pigovian tax, government will levy Pigovian tax on you. And also it involves this tobacco, then cigarettes, plastics. So all these are called Pigovian tax. Now, what is tax base? So this is the total amount of money or value that the government can charge tax on. So what does tax base say? So here, imagine there are 1,000 people. So 1,000 people earn 5 lakh per year, right? So what would be the total amount then? 1,000 into 5 lakhs. So government will levy tax on this total amount, 550 crore. So government will levy tax on 50 crore rupees. So it will see how much money has people earned on a yearly basis. So the government will levy tax on the total amount. So that is called as tax base. Now what is tax incidence? Here we can look through who actually pays the tax. So what do you mean by this? For example, if government puts tax 5 rupees tax on petrol, now what will petrol pump owner do? He increases the price by 5 rupees, right? So the amount of petrol will increase by 5. But the customer has to pay extra 5 rupees, right? So if the amount of petrol is 5 rupees, but the government levy tax of 5 rupees extra, then customer has to pay the extra 5 rupees, right? So here, what do we conclude? Here the customer is paying the extra tax, right? So that is called as tax incidence. Now what is tax buoyancy? So this means how tax collection increases when the economy grows. So tax buoyancy is nothing but as the GDP grows, the even the tax increases. So people have more money in their hand. Gradually, the government is also increasing the tax. So that is called tax buoyancy. Now, what is tax elasticity? So here tells us this tells us how much tax collection changes. Like if government increases or decreases the tax rate, it will tell you how much tax collection has been changed here. So that is called as elasticity. Now, what is tax evasion? So as the word tells you, evasion. So this is illegally avoiding tax or hiding income. For example, if Ravi earns 10 lakh, but he is showing just 5 lakh, he's showing the government that he has earned rupees 5 lakh, but the actual income is 10 lakh. So that is called tax evasion. Now what is tax haven then? Tax haven is nothing but it is a place or a country where people or companies pay very low tax. So either low tax or no tax at all. We have famous countries such as Cayman Island, Switzerland. So in this place, the country, the tax is almost zero. So that is called as tax haven, where you did not pay tax at all. Then we have principles of taxation. We have principle of equality, principle of certainty, and principle of convenience and principle of economy. Now, what do you mean by this? So principle of equality says that ability to pay tax should be proportional to income. As if I tell you, if this is person A and person B, so he is earning 50,000 per year, but this guy is earning 1 lakh per year, right? So this person is earning 1 lakh per year. You cannot levy tax for both the person the same tax, right? So if he is earning 50k, so government has to levy tax as per his income. So if he is earning 1 lakh, the government will levy tax more than compared to this person, right? So that is mentioned in principle of equality. Then we have principle of certainty. Here, taxpayer should know clearly that how much tax should be paid and what are the procedure, how to pay. So those are mentioned in principle of certainty. Then what is principle of convenience? Here, taxes should be collected at a time in a manner that is most convenient to taxpayer. Here, it states that under principle of convenience, uh, the tax should be levied when the government feels that so and so person can pay the tax, or else it shouldn't levy tax. Then what is principle of economy? Taxes should be as low as possible. So it states that under principle of economy, the taxes should be as low as possible so that maximum portion of tax collected goes to the government revenue. So under principle of economy, here the cost of collecting tax should be low. Now, what are the methods of taxation? We have proportional, progressive, and regression. Now, what is proportional? So here the tax rate remains same for all. Either you are earning 1 lakh rupees per year 30 or 30,000 per year, but the tax levied upon everybody is same. So that comes under proportional. In progressive, it is not like that. If you earn more income, then more tax on you. If you earn less income, then as per your total income, tax is levied. So here, people who earn more income has to pay more tax. So that is under progressive. Now under regressive, where tax rates decreases, either you are earning 1 lakh per year or 30,000 per year. That doesn't make any difference. But the problem is, if you are earning 1 lakh and the tax rate has been decreased, the advantage is for those people who are more income, right? For people who is earning less income, even though the tax decreases, his income is low. But he, according to him, he has to pay more tax, right? So those who earn more money, if the tax rate increases, it's the advantage for those who earn more money, more income, has more income, right? Even though the tax rate decreases, if a person is earning less, for him it is more, right? So that comes under regressive. Then we have two types of tax, that is indirect and direct tax, as you know. So indirect tax that includes GST, excess duty. For example, if you go to a restaurant or a movie, there the tax is reduced in the bill itself. So you need not pay separate tax to the government that I'm watching movie, I'm paying tax. So already it has been deducted there. Whereas in direct tax, you directly pay to the government. So it includes income, corporate tax, property tax, right? Now what are custom duty and excise duty? So custom duty, here it is tax on goods imported or exported out to the country. Whereas in excise duty, it is levied on manufacture or production within the country. So that's the difference. Now we have central sales tax and service tax. Now what is central sales tax? So this is a tax on sales of goods between states of India levied by central government. So if you are producing something in Maharashtra and you are exporting it to uh, say you are exporting it to say Gujarat, then then the tax on sales of goods between the states, right? So you are exporting between the states. So for that, tax has been levied under central sales tax. So what is service tax? So tax on service provided in India. So for example, services such as education. So it is a service, right? So even for that service, there is a tax under service tax. Now, next, what is GST? So as you know, good service tax. So this is a single tax on supply. single tax on supply of goods and service. So this includes right from the manufacturer to the consumer. So this is uh, a tax where all the separate tax has been combined here. So this was launched in 2017. So this was launched in 2017 under the 101 Constitutional Amendment Act 2016. So this was brought to eliminate tax on tax and also increase the transparency so that to reduce corruption, right? So this is a dual model where includes central GST as well as state GST, two separate GST. And also one point to note down is GST is not levied on export items. So we have some of the GST slab rates where there is 0% GST on milk, cereals, fresh fruits, vegetables, 5% GST on spices, sugar, tea, coffee, edible oil, domestic LPG, then 12% on butter, ghee, mobiles, processed food. So whenever we buy the items, we can see behind the packet 12% GST. So you can see that. And also 18% on ice cream, refrigerator, heater, soap, hair oil. Then 28% on big items such as car, washing machine. So where GST has been not been applied. So GST has not been applied for natural gas, high speed diesel, alcohol, aviation turbine fuel, petrol, crude oil. For these, GST has not been applied. Then next. Now we have GST reforms. So Raja Chale Tax Reforms Committee, which took place in 1992. Then we have Kulkar Committee 2002. So Kulkar Committee, where they set up two task force, that is for on direct tax as well as indirect tax under chairman of Dr. Vijay Kilkar. So this was committee under Dr. Vijay Kilkar, where they set up two task force on direct tax as well as indirect tax. Then we have Parthasarathi Shumi Commission, also known as the Tax Administration Reform Commission, TARC 2013. Now, under GST Council, there consists of a chairperson, vice chairperson, members, quorum, decision. Let us look through it. So, the chairperson of this GST Council is none other than the Union Finance Minister. Then, vice chairperson is chosen amongst the Minister of State Government, and also the members includes all the ministers of finance, taxation of each states. Right. So all the ministers under the uh, finance sector. Then what is a quorum? So there should be at least 50% of the total members in order that the meeting takes place. So there should be a quorum of 50% at least. Then to take a decision on the financial statements, there should be a 75 majority as well. Then what are cess and surcharge? So cess is levied for specific purpose. So this is paid by all the taxpayers. For example, 4% tax on health and education. Now what is surcharge? So these are paid by high income people. So this is tax on tax. So extra tax on income. Like those who earn 50 lakhs or 1 crore per year. For them, there is a surcharge. So these are the tax upon those people who earn more income. That is above 50 lakhs. So cess is nothing but levied for specific purpose. So this is paid by all the citizens, all the taxpayers, such as, for example, 4% on health and education, right? So that is called cess and surcharge for those who earn more than 50 lakhs. Then, then moving on, we have a market system. So under market system, we have types of competition. That is the perfect competition, monopolistic, monopoly, monopsony, and oligopoly. Now, what is perfect competition? So here there are a large number of buyers, sellers. So for example, uh, it includes farmers. So if you're a farmer and you want to sell the agricultural products, so there are many farmers, right? If you go to market, so you could see a line of shops or the uh, shopkeepers or the farmers selling their products, right? So here there is no need of advertisement cost. So that is, so these include the basic necessity food, so in order to live. So these all comes under perfect competition. So here there is no advertisement cost. Then all sell identical products. If one shopkeeper sells cabbage, then second shopkeeper also will sell cabbage. And also there is no restriction. Anybody can set up a shop, they can sell fruits, vegetable, etc. There is no restriction. There is always free entry and exit here. And also there is no transportation cost, right? The best example is, as I told you, farmers, then market. Now what is monopolistic? So here many sellers offer similar but not identical products. For example, toothpaste is universal, but there are many brands and toothpaste, right? For example, Colgate, Pepsodent. So the product is same, but there is many brand and product is not identical. One can build different shape of toothpaste, another company will build different. So here there is an advertisement cost. As we see in TV, we get advertisement of toothpaste, right? So there are many sellers here as well as many buyers here, and also there is more advertisement cost. And again, there is free entry exit. So we as a people can also set up a business of toothpaste, right? As well as other products as well. So the next one is monopoly. Here there is only one seller controls the entire supply. So in monopoly, only one seller controls the entire supply. For example, in India, railways. So there are no other companies who set up a railway institution in India, right? So there is only one institution under government. So we have only one seller who controls entire supply. That is monopoly. The best example is, as I told you, railways. So here there is no free entry exit. So if you wish to set up a railway institution, so if you want to purchase a train or set up your own business, so you cannot do that. Now what is monopoly? Here one buyer, there is only one buyer but many seller. For example, defense deal. So there are many defense manufacturer, but only one buys it, right? So the best example is the defense deal. Then what is oligopoly? Here few large company dominate. Example, the airlines, Indigo, then Air India. So all such comes under oligopoly. Then telecom, soft drinks. So here few large companies dominate, right? So if you compare with the local soft drinks, but majority of them purchase Coca-Cola, right? Because that is dominant. So that comes under oligopoly. Then what are the types of goods? So we have few types of goods here. The first one is the normal goods. So what happens in normal goods? As income increases, demand also increases. Whereas if decreases, demand also decreases. So for example, groceries, clothing, household items, right? So that comes under normal goods. Whereas in luxury goods, these goods include which are not the essential one, right? People buy, when do they buy? When they have lot of money, right? Car, Rolex watch, anything it would be. So these are not basic needs of life, right? So if people have money, then they buy it just for show. Then what is inferior goods? So as people become rich here, they switch better quality products. For example, if person was poor a few years back, he used to consume packet of noodles. But as he became rich, he forgot that noodles and he switched to quality food, right? So that noodle was a inferior goods here. Now what is private goods? So here the private goods belongs to the individual, but it is not shared. For example, if one can buy a can of Coke, that is for him. He cannot share that, right? So others cannot drink. So, see, if I buy a Coke, I cannot use it as a public goods, right? It is for me, for myself. So that is called private goods. Now what is public goods? Here everybody can use it. For example, public transport with the best example. So everybody uses it. So that is public goods. Now what is merit goods? Here people are underestimate the benefit. For example, education, healthcare, right? So these are merit goods. Then we have demerit goods, which is harmful to people or society, such as tobacco, cigarette, junk food. All this comes under demerit goods. Then what is Veblen goods? So these are luxury goods which has high price. So here demand also increases. So such as expensive car, watch, clothes, etc. So these are all Veblen goods, luxury goods. Even though there is high price, there is also a high demand, right? So that is called Veblen goods, such as expensive cars. So these are the best examples. Now, on the basis of price, we have two types of goods: substitutive goods, complementary goods. It is on the basis of price. So what is substitutive goods? So if price of one goes up, people switch to another. For example, if tea becomes expensive, people will switch to coffee because it is less expensive than tea. So that comes under substitute goods. Whereas in complementary goods, if price of one rises, demand for other falls. For example, you can take car and petrol. So if petrol price increases, people use less car, right? So that comes under complementary goods. Now we have a few other types of goods, actually given goods, free goods, basic goods, and intermediate goods. Now what is given goods? Here, as the demand increases, price also increases. For example, bread, rice. So these are essential items, right? For example, if price of rice increases, still people with low income have to buy rice for their survival, right? So as demand also increases, price also increases because we cannot sit without buying it. So it is necessary. In order to live, we want to consume rice, right? So those are given goods. Now what are free goods? So these are naturally available in unlimited quantity. Example, sunlight. So anybody can go for fishing and consume fish, right? So all these are called free goods. Then what are basic goods? So basic goods are those goods which are essential for daily survival, for functioning of economy, right? So food grains, electricity, salt. So these are all basic goods. Now what is intermediate goods? These are between raw materials and finished goods. So such types of goods are called intermediate goods. Then we have the finished goods and the capital goods. Now what is the difference? So finished goods are those goods which are ready to consume, right? For example, the processed food you get, for example, Lay's, Kurkure. So those are finished goods. What is capital goods? So these are goods. For example, if you want to cultivate tomato as a whole is a finished good. You can consume it directly. But in order to prepare that tomato, you need to put some fertilizers to the plant so that the plant produce a fresh, the bigger tomato, right? So that comes under capital goods, such as plants, machinery, to convert basic items to finished goods. So that is called capital goods. Now, what is elasticity of demand and income elasticity of demand? So this elasticity of demand tells you that how much demand changes when price changes. For example, if a amount of if the price of mango increases, people will stop buying mangoes. They will quit buying mangoes, but they will shift to apple because apple is less expensive than mango. So that is called as elastic. So this is elastic where people shift, right? Since one item is expensive, it's okay. We will consume another fruit which is less expensive. Whereas salt you cannot do that because in order to prepare food, salt is must, right? That is a primary component in preparing food. So even the price of salt increases, people will not stop buying the salt, right? Because it is essential. So because that is essential, it is inelastic. So that's the difference here. What is income elasticity of demand? So here it shows how much people buy more or less something when their income changes. For example, as I told you previously, if people salary increases, they will shift to better quality of food, right? So if a poor person who used to consume noodles when he was poor and later on if he became rich, so he will shift from noodles to a high quality food, right? So that noodles will become negative income elasticity there. Then we have law of demand here. So it states that the as price increases, demand decreases, whereas vice versa, price decreases, demand increases. But this is exception for those types of goods, as I told you, given goods. Now, what did given goods say? As I told you, demand increases, price also increases. For example, the rice, because it is essential to live, right? So even the price of rice increases, people will not stop buying those rice items. They want to consume to live, right? So that is given goods. So the law of demand is exception for given goods, Veblen goods, and essential goods. Then what is demand curve? So under demand curve we have a movement as well as then we have shift. So under movement there is a change in quantity demand which only depend on price. So here it only depend on price. Whereas in shift it depends upon income. So this is not so important. Here it is nothing but when does it extend? When does the extension takes place? As the price decreases. If price increases, there is a contraction. Whereas in shift, there is a forward demand. There is a forward and backward steps here. So as the demand increases, there is a forward shift. Whereas demand decreases, there is a backward shift. So under shift, there is it depends upon income. As income increases, people purchase better quality. It will move forward, and demand also increases, right? When people have less money, the demand decreases because people will stop buying items.